going on, y'all? How y'all doing? How y'all doing? Is there anybody in here? I'm a little late. I apologize for being late. Give me a minute to get this together. You know, the adventures of Super Dad don't stop. The adventures of Super Dad don't stop. Take that, take that, take that, take that, take that. Take that, take that, take that, take that, take that. Prop that up right there. That's good enough there. The summer come out tomorrow. Bet your bottom dollar that tomorrow. Hola, que pasa? Tim's thumbnail. Hilarious. What thumbnail do I got now? I made this a long time ago for people like, and I don't, if E-Rock ain't in here, E-Rock, if you in here, put something in the chat. I made this live stream like 2 hours ago just so that E-Rock can get her notification. She better be in here. She be popping up at night. Oh, I was going to get on here and do some late night studying, and y'all are here. I don't be getting my notifications. Do you get your notifications? You do you? Hey, Blue, Azul, do you get your notifications? What's up here to learn the chef? What's going on, Felicia? What's going on, Rhonda? What's up, Dirk? Hey, Dirk, I ain't seen you in a minute, Dirk. What's up, Deborah? What's going on, Trader Mo? What's up, Fine and Superman? What's up, KC? And again, hola, que pasa, Valdez? For those who don't know, Valdez is our neighborhood AI. That's not Valdez right there. That's an AI generated image. What's up, Kim? What's going on? Hey, man, let me get find my picture so I can see what I'm talking about, because I made this live stream 2 hours ago so that E-Rock can get her notification. And guess who's not in the chat? When and where? That's what I'm talking about. When and where? When and where to look for a cat? Why does it do this now? There you go. When and where to look for a market maker sell model or market maker buy model. For those who didn't know what MMSM or MMBM meant, that stands for market maker sell model, market maker buy model. When and where to look for these. Now that I have officially pissed Rocky off and I have officially separated the wheat from the tare, guess what? Back when I first started trading the ICT concepts, all of the fun stuff that Michael J. Huddleston teaches on Al Gore's internet, all that stuff that drives us crazy because we're trying to cram it all in. Cram. Shout out Tony Baker. Cram. Right? We trying to cram all that stuff into our cranium. And then we trying to figure out why it's not working. You know why it's not working? Because we're looking for we can't see the forest from staring at the tree. We can't see the forest from looking at the tree. Explain, Tim. Back when I was a wee little grasshopper and I had the homie Kwani pull up and do a Tim's Tidbit takeover, he was talking about market maker sell models and market maker buy models. At that time, I could not identify a market maker sell model or a market maker buy model. I Couldn't see them, couldn't understand them. It gave me a headache. I said, man, forget this market maker sell model, market maker buy model. Forget it. Same way I was with breakers when Alexandria Cartwright and PW was trying to teach me how to see breakers. Forget these breakers, man. Forget them. They give me a headache. Forget them. Right? Because ICT got a lot of concepts for you to take in. But once he released the core content and I sat down and I started to digestify the entire core content, right? And then one day something just clicked in my head. It was like, I said, you know what? All of this, look, hold on. All of his concepts, because he got a lot of them, they're all going on simultaneously. Michelle Tucker! What's up, Michelle? They're all going on simultaneously. So I'm looking for everything, right? Not knowing it's all happening. Michelle say the 4-hour gap filled. I didn't watch the market this afternoon, so thank you for telling me that. You talk about the 4-hour gap. We was talking about that. We left that little piece down there. I said we probably gonna go get it. I want us to see us go get it. I'll check it out in a minute. Yes, I'm glad you say that, because that's the perfect segue into when and where to look for a market maker sell model, market maker buy model. Now, if you don't know how to trade market maker sell models and market maker buy models, before you run out and start trying to trade it right now, let me let you in on a little secret. Come here. Get off my screen, Michelle. Right? Come here. Let me go full screen. Come here. Let me get closer to you. Right there. You are already trading market maker sell and market maker buy models. You just don't know it yet. That's the gag. You're already doing it. Once I figured this out, I said, oh, hold the phone. Remember when I told you something clicked in my head? I said, oh, hold the phone. Right? Finding Superman said, my eyes go right to the rejection blocks. I don't know if it's good or bad. I said, oh, that last time was for Rocket. Now, just like the important thing you got to remember about every single, hold on. Missing on my chart. There it is. Michelle, you are correct. You are correct. We went to it. We went to it. Let's see where we are. Oh, look at here. This is a perfect time to talk about this. Oh! When I be doing stuff like that, it be getting on my wife's nerve. Like one day I was doing something. I said, let's see who can do this the longest. When I tell you that drove my wife crazy, oh my goodness. She was like, if this was not your live stream, I would have clicked off. I can't stand when you do stuff like that. I said, oh, you don't like that? Now, if you don't take anything away from this live stream, besides, if you only, should I say, if you only take one thing away from this live stream, a market maker sell model, a market maker buy model, order block, a breaker, displacement, anything dealing with ICT concepts, anything, you always want to be looking for price coming to an area, I just say a point, coming to a point of anticipatory anticipatory, give me a good word, a point of anticipatory encounters. Yes, there you go. You want price to come to a point of anticipatory encounters. Tim, what were you talking about? You want price to come to an area where we anticipate a reaction, right? Anything dealing with any ICT concept, you want price to come to a point of where you anticipate a reaction. Point. I forgot to change this. Right there. That you anticipate a reaction. Now, what does that look like? Anything you want it to look like. It can be let's copy this. It can come in the form of, this can be, I'm doing this for the note takers. This can be a higher time frame, PD array, higher time frame PD array. You want that to be in the discount or premium. Higher time frame, discount, or premium PDAs, right? They can come in the form of that. Why do I keep closing that? I don't know. It could be that. And gist of it, because PDAs count everything. So let's break it down a little bit clearer, right? So it can be the place I like to look for it is at higher time frame liquidity pools. That's my favorite place to look for it. Right? My favorite place to look for is at higher time frame liquidity pools. Liquidity pools. Somebody in the chat, who E-Rock, I did this 3 hours ago just so that you can get your notice. And you just not getting here. I posted this 3 hours ago because you were like, hey, I was going to get on here and I was going to do some late night studying and you guys are on here. Do y'all get y'all notifications? I'm not getting mine. Hey, Azul, are you getting your notifications? Are you getting it, Azul? Maybe it take time to kick in. Maybe you don't have me in the special notification area. Maybe you got me in the only notify me sometimes. Maybe you don't have me selected to all. Maybe you don't have me by your favorite streamers, by your favorite YouTube streamers. Hey, ain't nobody still ain't telling me where liquidity pools at. I asked the question. I said, hey, where are the liquidity pools? My favorite place to look for a point of that I anticipate a reaction. This can be a higher time frame discount or premium PDA. My favorite is higher time frame liquidity pools. Right? Where are the liquidity pools? I still don't see anything. You and ICT are the only ones I have notifications set up for. Well, maybe you just got it set up for ICT and not me. I bet you get his notifications. Tear. I'm sad. Nobody still ain't said nothing. My feelings hurt. Where Michelle at? Where Michelle? Michelle be answering questions. We're here to learn and share. Where Rhonda at? Somebody, y'all must be lit. Swing highs and there you go. I thought I was gonna have to clutch the pearls. Swing highs and swing lows. That's where the liquidity pools are. Right? Previous session highs and previous session lows. Thank you, Kim. Thank you, Kim. Previous session highs and previous session lows. Swing highs and swing lows. Thank you. Now, my favorite place to look for the reaction points are at liquidity pools. Why is that my favorite place to look for it? Because I'm a firm believer and the okay, you still working and watching. The market seeks out liquidity and balance. Liquidity and balance. So if the market seeks liquidity and balance, where's the biggest amount of liquidity? In the pools, right? And then the balance is, putting together, going back to imbalances, fair value gaps, liquidity voids, volume imbalances, stuff like that. Right? So where and when to identify market maker sell models or market maker buy models. The reason why I said this is the perfect time to be talking about this is because what did we come to today? These are daily candles. If you look over here, there's a D highlighted right there. These are daily candles. What did price come down to today? Let me blow this up. Spread this out. Right there, so y'all can see. So y'all can see. Dakota say he want to see. See this little red line right here? Matter of fact, let me hide everything except that little red line right there. Gonna hide everything except that little red line right there. All the other stuff, get out my way right there. Okay, so see that little red line right there? We came down to a daily low, right? Not only did we come to a daily low, we came to a daily swing low. And this low has been sitting down there for 1, 2 full days of trading. So what has been accumulating below this swing low? I don't know if you can see that, but that is mark. Let me make it bigger That is marked sell side liquidity. We've come to daily sell side liquidity. Sell side liquidity. Now, that alone is not enough. What's up, Lil Hawk? Man, Father of Legends sent me he sent it to me on Instagram. He sent it to me on Instagram. I can't look at it. I can't look at it on if it's somebody on Instagram, y'all come over to YouTube. I'm about to hang up on y'all. Is that Stock Chaser enough? Stock Chaser, go to YouTube. Whoever in here, go to YouTube. Who is that? Trading Edge. What they say? Trading Edge. Nadia. Come over to YouTube, Nadia. I'm about to hang up on here because I want to show y'all something on that's on my IG. I'm gonna get back to what I'm talking about. For anybody who got issues with what I'm doing.
I'm not gonna lie to you. I haven't talked to God in about a month ever since I started praying for that girl from here to this.
Let me see. Was it on IG? Was it on IG or Twitter? You know what? It might have been. I texted to my family. Let me see what it was. I think I texted to my family. It's gonna drive me crazy. I got to find it. Yep, Father Legend sent this to me. It was on Instagram.
Big spider.
There we go. There you go. Hold on. Now, in order for y'all to see it, I have to. Let me see here. I know y'all like, Tim, we care not about what you about to show us. I don't care. I done started now, and I can't stop. I can't stop because I've started now. Y'all know how I get. What is this called? Stream. What is this called? StreamYard. Please don't make me sign in. Oh, it's making me sign in. Oh, come on. Or log in with Google. Let's log in with Google. Yes. It's me. What? Why did it say? This is really making me mad now. Anyway. Oh, hold on. Anyway, it was a thing where he said it to me. And it like they typed in big spider in the English and okay. Copy. Watch I go through all this and then it's still on. Now, when I did this before, it made me use Chrome. Now it's telling me forget it. I'm mad now. I don't want to do it no more. I don't want to do it no more. Move, phone. You're dumb. Move. Get out of the way, phone. You're dumb. Mad now. Piss me off. I forgot what I was talking. What was I talking about? I'm mad now. Couldn't figure out how to get it. Log in. Move out of the way. What was I talking about? What's up, Stock Chaser? Where was I at? What was I talking about? Somebody tell me what I was talking about. I remember just coming down to a daily low. That could be sufficient, but we're talking about you want to look for it at price coming to a point that you anticipate a reaction. Right. So today we came down to this swing low. What about, hey, let's make this interactive. Looking at this swing low where we came down here, right there to that swing low right there. What about this swing low, in your humble opinion, would you say makes this a place where we anticipate a reaction out of price? Besides the fact that it's a swing low. What about this area? Y'all hold on. Christopher, do me a favor. Bring me my water. I don't know if it's on the stand in the living room or on my dresser, but my water. It's either on the stand in the living room or on my dresser. What about that low? Y'all ain't typing. What about that low right there? Makes you anticipate some type of reaction. What about coming into these sell stops down here? Right. Put it on the bottom. Under the bottom. Yeah, just okay. Thank you.
Good streamings to you.
Thank you. Stock Chaser said, I think had a weekly gap, a 4-hour gap. Let me open my chart. That worked, right? A gap. We came into a gap. There's a gap right there on the daily that we came into. This swing low is right there, relatively close to that gap right there. No, we don't know it closed below the low, above the low yet. We coming to it. Why are we anticipating it to do something coming to it? What breaker to the left? There you go. We got a breaker over here. We got a breaker over there. Right, we took out Friday's low. It's the second low we done. Yeah, that's a Friday low from last. I said second low. That's a weekly low, not a weekly low. That's a low from a day last week. It's a swing low from last week. Yeah, that's a stretch on that, Felicia. Give me something better. A breaker, an imbalance. Thinking it's lining up with a higher time frame imbalance. We got a daily imbalance. We got an order block. Now we got layering PD arrays, right? Layering PD arrays. High, low, open, close, baby. That's it. Right? Layered PD arrays. That's why coming into this low, we're anticipating price to do something. Right? We're anticipating price to do something coming into that low right there. Now, this is just as simple as this. Now, this low can be coming into a higher time frame fair value gap that you anticipate price reversing off of. It can be coming into an order block that you're anticipating price to reverse off of, a breaker that you're anticipating price to reverse off of. You know, it can be any discount PD array where you expect, yeah, we tap the weekly volume imbalance. It can be a volume imbalance that we've come to, any higher time frame PD array that you're coming to and you're anticipating a reaction, right? That's the way it works for every single ICT concept. You want price to come to a point of an anticipated reaction and then do something. You want to see something happen. You want to see sponsorship to let you know that your anticipated move is likely to unfold. You want to see a respect of a level to let you know that it's respecting the discount or premium PDub raise. You're anticipating something to happen. That's the way it worked for every single ICT PDub raise concept, anything, right? Always remember that, because it's all about the narrative. It's all about order flow. It's all about bias. It's all about liquidity. It's all about time. It's all about price. You see how everything just work together? Is time more important than price? Is price more important than time? Is liquidity more important than, is this more important? No, they all work together. Connect the dots. La la la. This is the church. This is the steeple. Open up the doors and here are the people. I did it wrong. This is the church. This is the steeple. Open up the doors and there are the people. Oh! Now, let's do it one more time for Rocky on the big screen. This is our church. This is our steeple. Open the doors and here are the people. Oh! That was for you, Rocky. Now, once we come to a place of anticipated reaction, this is how you can anticipate a market maker buy model or sell model to form, right? And then this is, once it starts forming, this is how you can verify that you're in one and the probability of where it will go. Well, Tim, how am I going to do all of that? All right. We said this low right here was an area of that we anticipated to do something. Let's do it for the note takers. Let's do it for the note takers. Ba-bum, 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 bum. Let's do it for the note takers. Ba-bum. Hold on, let me get this together. Put this back on 10. I think that's 10. What I be having it on? Then I hide it. Okay. For the note takers. All right. So for the note takers, you want to find the start. This is going to be a swing high or swing low. Whoa. Find the start of the move. The move is a price leg, a dealing range, whatever you want to call it. And it's going to be a we're going to put swing high. I don't feel like typing all that out, or swing low, because it worked going both ways, right? A swing high or swing low. You want to find the start of the move. And then, so in this case, this is the start of the move. In this case right here, this is going to be the anticipated reversal of the move, right? So we're going to look at it from here to here for the anticipated, and then we're going to look at it from here to here for the looking to see if it unfold, right? So now for Wednesday, October 18th low, right? That's going to, and then find. Uh-oh, what did I do? What did I hit? F11 does something. What does F11 do? Oh, F11 puts it in full screen. I just learned something. Find the opposite end. Well, I put start, so I'll put finish. Find the finish of the move. And again, that's going to be a swing high or a swing low. It works both ways. So if the start of the move is a swing high, the end of the move is going to be a swing low, right? Now, in the case of the swing low has not formed yet, like we did here, and we're anticipating a possibility of a market maker buy model. We're anticipating it to maybe happen, to maybe unfold. Why? Why would you anticipate this? Why would you anticipate? Because you're coming to an area where you think price may potentially reverse off of this area here, right? We already know price don't just spin around on a dime. Sometimes it does, but we're anticipating it's a probability of it doing it right here, because we got institutional sponsorship and we're expecting price to be protected by this breaker, that order block. We're expecting stuff to be protected, right? This order block is the last line of defense right there. We don't want to see this order block get violated, but this is the last line of defense. Truly, the swing low is the last line of defense. Truly, you can get like rejection blocks down here, like how we came into this rejection block here and took back off, right? But when it get down there, the lows are 8.5% of the time, 8.5 times out of 10, it's if we get all the way down here, the lows are getting taken or the highs are getting taken. So the institute sponsorship should protect the anticipated move up via the breaker, the order block, and this order block here, last line of defense. Right? It can slide all the way down to what's the price on that right there. It can slide all the way down to 42.91.50, because that's the price where the institution said, this is the price I want to get long from. 42.91.50. This is the price I want to get long from. Got the pang from that price right there. Why that price, Tim? Because that's the open of that order block. That's the price that the algo is remembering. The algo is remembering this entire candle, but the opening price right there, when you pass that opening price, that's the change in the state of delivery. So that price is very important to the algorithm, the change in the state of delivery. Now, so back to what I was saying. You want to identify that this is the top of the move. We're anticipating this here. Nope, right here. This is the top of the move here. This is our swing high. This is the high that came down and took out that low right there. Boop. That's the top of our move. Come down, boom, to the bottom of our move. I'm going to put it one candle over because we don't have a candle over here yet. We're predicting what we think may happen in the future. All right. So we highlight that. Let's go ahead and throw our equilibrium on there. Since Trading View and start putting the middle line on there. I wonder why they did that. Think it has something to do with the concepts that require you to constantly look at the 50% line? I don't know. Okay, so boom. Now we got that highlight. Can y'all see that gray? Let's change that to a different color that y'all can see. Let's make it blue. Can y'all see the blue? Can y'all see the blue? Okay. Now that we got the range selected on the higher time frame, right? Find the start of the move. On the higher time frame. Find the end of the move on the higher time frame. Once you do that, boom, boom, we've done that. Start the move right here. We're coming to the bottom here because this is where we're anticipating the reaction right now. We don't have future price. We're on the hard right edge right now. So we're anticipating the reaction. That's the lowest low that we got right now. We don't have a swing low yet, but that's the lowest low we have at a point where we've taken sell stops, rejected off those sell stops, came back down into an order block over here. We came here, got down into, look like did we get into the order block and the breaker? Boom. Yep. Got down into the order block and the breaker. Breakers come first on the scale, so we're going to give it to the breaker because we touched it first. This time we come back down. Boom. We already touched the breaker, so now we're giving it to the order block. You can give it to the order you want to give it to, but on the PIM- chart, breakers, I think breakers come before order blocks, right? So this first time we touched it, I'm giving it to the breaker. Second time we touched it, I'm giving it to the order block, right? There we go. This time we came down, I'm giving it to the fair value gap. So gave it to the fair value gap there because we was coming down to the imbalance, came back down past the imbalance. Now I'm giving it to the PIM- chart breaker, right? Come back down again, order block, right? Rejected off the lows. Now I'm looking at this area now because it's gave me a rejection off a low anticipated point of a reaction. Now, the way I like to weave the concepts together, right? Remember, I say they all working together all at one time. I like to weave them together. This is just personal. You can do it the way you want to. Find a way that works for you. Then you want to drop to the lower time frame of your choice. I prefer 2 time frames lower. That's what I prefer. Let me do it like this right here. In case somebody screenshot that'd be like, Tim said 2 time frames. What you got to do? Lower time frame of your choice. Right? I like 2 time frames lower. So now we are looking at daily candles here. I'm overlapping all this so when I go down, it'll still be like in the screen. So we got a daily and let me give y'all the way I break it down. This is important. This is my hierarchy of my time frames. You can see them right over here. I don't know if this is the default, but you can see what I got right up here. Right. So my time frames are, you can't see my other ones over there. I'm gonna go all the way down. I got 15 seconds, 30 seconds, 1 minute, 5 minute, 15 minute, 1 hour, 4 hour, daily, weekly, and a monthly. That's my hierarchy of my time frames. So if we're looking at a daily chart right now, what's up? Capital? I was gonna try to say that. I said it before. I think I got it right before, but I ain't gonna mess it up today. Salute. I salute you with both hands. We're looking at daily candles. Which time frame do you think Lil Timmy Rogers is going to drop to start looking for what he's looking for? Because we have come to a point that we anticipate her reaction. Psi. Okay then, Psi Capital. I don't think that's what I said last time. If I tried to say it, I know I ain't said that. I said Lil Timmy Rock. There you go. Opa Bebapa. Where is it? Obinia. Inodin. Obinia. Drop to the 1 hour. Move, Michelle. Kim, 1 hour. Stock Chaser, 1 hour. Trader Mo, 4 hour if that's you. I said Lil Timmy Rogers. Thank you. 1 hour, 1 hour, 1 hour. So Mo and Michelle, they drop it to the 4 hour. Lil Timmy Rogers, drop. I know you didn't say 15. Lil Hawk drop it to 15 minute. But I like to go 2 time frames down. And the way it works, right? If you're on the daily, 1, 2, that's an hour. If you're on an hour, 1, 2, 5 minute, right? If you're on a 15-minute, 1, 2, 1 minute. If you're on a monthly, 1, 2, drop to a daily chart. That's how I do it. All right. You meant 1 hour? Okay, then. Lil Hawk said he meant 1 hour. Right? That's how I do it. I go 2 time frames down. You can go however you want, but from my experience, and shout out Casper, Jesse Rogers, my little Caucasian cousin, his name Jesse Rogers. I ain't making that up. Right? Casper. He was talking about something with like going between the daily and the 1 hour and the 4 hour and 15-minute. And I was like, man, let me try this 2 time frame down with everything. And it just, I don't know if with like cutting it in half, and ICT concepts cut everything in half, and you make a half of a half, and you got a quarter, and you got a half of a quarter, and you got a half of a quarter, and all this. I don't know, but it works well together for me. So now that we done said all of that talking, let's move down to daily 4 hour, 1 hour. 60 minuten. Type in 60 or 1H, and it'll get you to the same place. Now, what are we looking for? We are anticipating to see if because we're on the hard right edge. We're looking to see if a market maker, we are selling down right now. So we would be looking to see if a market maker buy model forms, right? Here is our range. That's the highest high. From that high to that low, right? That's our range. Okay. This is how you find the market maker buy model and sell models, right? This is how you anticipate it right here. And then you find them the same way. You find them the same way. I'm trying to get this in the order where you're supposed to be reading it. There you go. There you go. You find them the same way. Now, don't worry about it. It's all scrunched up. You don't need to see it all pretty anyway. Okay? So, now that we've taken out this sell side liquidity right there and got a little rejection off of it, you want to see if the market maker buy model starts to shape up. Right? And if you look inside this price range, looky what we have here. Boom. What is that? What is that right there? That right there is some consolidation. Right? We got some consolidation inside this price range right here. So we got consolidation on here. Price has sold down and came to an area of anticipated support. So now that we're at this area of anticipated support, if we start to see price give us a smart money reversal right here, right there, bop, 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 smart money reversal. Here we go. It's because we came down, took out liquidity, right? Came up, pushed down, breaking market structure, smart money reversal, right? And then that smart money reversal has some displacement in it, and we leave behind. We're gonna layer this up, pal. We're gonna put us a fair value gap, and we're gonna line that puppy up. We're gonna line that puppy up right here on this prior low, right there at that breaking market structure, creating that there breaker, right? So that right there, when we come back into that right there, that there is going to be our low what they call it? Low risk short. I think that's what he called it. Low risk short. We get us a low risk short. Bam. Low risk short. I think that's what he called it. I'm going to push up again right here. Bam. Right. So once we get that low risk short, now we like, oh, we in a market maker buy model. Because we got the smart money reversal, right? And this is what we're anticipating these moves. So we're looking for this. Now that we got the range, we're looking for the smart money reversal. When the smart money reversal set up, we get a displacement with the fair value gap, the imbalance, right? With the breaker there, we like, oh man, that's a low risk short. Right, we get the low risk short. Why is it low risk short? Because it's a little bit of risk. If price want to keep sliding down, there you only risking to this low. It's a little bit of risk that you put into it to say, hey, I'm wrong. It's going to slide some more. So you got the low risk short. And then you come up here and you get your high probability short right here. Boom. Boom. High probability short. We ain't going to be that close to equilibrium. We're going to get the high probability short like right here. Right. So now we're going to layer it up again. We're going to layer it up again. Boom. Now we got our high probability short right there. Boom. Right. We got our high probability short right there. Pushing up. We get right here to equilibrium. Right. We're going to get that equilibrium of our range. Right. Do this right here. Now we get the equilibrium. This area right here, it might have took off and left us. It probably didn't even give you a high probability short. It probably gave you a low risk short and took off and got the equilibrium. Now we at equilibrium, and this is where we're waiting to see if we're consolidating. Are we going to just break out to the upside, right? And like boom, boom. If we're going to break out to the upside, boom, come back, boom, and enter here and go up and take out the high above the consolidation, right? Or are we going to break out to the downside, boom, come with the Judas swing, yonk, go yonk, 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 yonk. This is where it can do it either way. If it does come back into this right here, right, you can jump on it down there, get you a better entry. If you're scared of it, wait for it to come back up, then come back down. But since we are in the market maker buy model right there, we come here, we got this order block over there. It's going to be an order block over here. When you come back down, boop, that's a place to get long off of them opposing order blocks. And yonk, right? That's the old silver bullet right over here at this point right there. Now, that's how you look for it to anticipate. Right? What did I say? Did I say buy or short? What did I say? Was I saying short? What was it? We buying. If I was saying short, I'm sorry. We buying. This is a buy model. Buy model. I'm sorry. Now, all of that right there. Okay. So now, that is finding it to anticipate what's happening. And you can do it on any time frame you want. Now, this time, we're going to go to an area that has done something already based off of our criteria. The market is open. The market is open. The market is open. If you're going to trade, please trade safe. If you're not going to trade, please take a copious amount of notes and go back and study what you saw today. Thank you. We're going to look at this area right here. Why are we looking at this area right here? Because this high right there came down below this low. It's not a swing low. Came down below this low. But what did it come to? Let's see. This low came down to the hoarder block. Remember we talked about the hoarder block? right here. Last two down close candles that came down to this low right here before we got the expansion up. It came down to the hoarder block. So right there, we're not coming to a liquidity pool. Now, yes, there is a daily liquidity pool under here, but on the daily time, it's a liquidity pool for the lower time frames because it's a daily low right here. So 4 hours and below, it's an intraday liquidity pool resting right here under this low. But on the daily time frame, we're not coming to a liquidity pool. We're coming to a PD array, right? We're coming to a PD array. A discount PD array. Now that we got our range highlighted, this time let's go to a 15-minute. Right, we can go to the hourly, but let's go to a 15-minute. See if we can get some more detail. Right, since we're looking at something that already transpired. Okay, let me make sure I highlight everything correctly. So we're going from the start of this move, and we're going to the end of this candle right here. That's why I got it on there. On TradingView, the candles start at the beginning of the candle. So you put it at the start of the move because you want to start at the beginning of the move, and then you put it at the next candle because you want to incorporate the entire move. This is going to take you through the entire move of this candle right here. Now let's go down to 15 minutes. Go to the highlighted area that we got highlighted. Right? Oh! What do we have in that range? Oh, goodness. You all right, sir? You all right? Oh, yeah. We got come here from this kid Holiday Hill, right? What's that right there? Smart money reversal right there. Low, this is a real low risk short right there, but that's a smart money reversal. I mean, I kept saying short, low risk buy. I just said it again. Low risk buy. I was saying low risk short before. I'm sorry. Low risk buy. Low risk buy right there. High probability buy over there, right? And then at the high probability buy, look how we took off. Right? Boom. Took off right there. Where do we come back to? Here, original consolidation. Right there. Oh. Right there. Now, how do you find it? How did we find it? What did we do to find it? What we do? We went to the start of the price leg. We went to the start of the price leg. God dog it. We went to the start of the price leg at an area of anticipatory reactions. Went on up in this area right. Let me put my fancy dancy on. Anticipatory reactions. We're coming up to a premium PD array. All right. Once we got up there, this daily PD array on the lower time frames, we got a smart money reversal. And we start to come down. We came down to an area of anticipatory reactions. We got a smart money reversal, giving us, right, this swing high and this swing low right there. At the times of this transpiring, it wasn't a swing high and it wasn't a swing. Well, this was a swing high, but this wasn't a swing low. It was just a low looking like this right here. And then it eventually played out, right, to give us our market maker buy model right there. You see the V or U or whatever you want to call it. Where is it? Let me get my path. Come here, path. Right, it's already on top price. You see it right there? Let me make it bigger so y'all can see it. Let me make it bigger so you can see it. Boom. Y'all see it? Can you see it? Can you see it? You see it? And that, my friend, is how you find where and when and where to look for a market maker sell model, market maker buy model. When do you look for it? When you come to a point of anticipatory interaction. And once you come to that point of anticipatory interaction, you look on your lower time frame. Drop down to 15 minutes just now. Right? Here we're on 15 minutes right now. on our lower time frame right here on 15 minute, we will be looking for a smart money reverse. I wouldn't come to the 15-minute. I would go to the hourly. But let's just say if we was looking at this 15-minute, we will be looking for a smart money reversal here. We came there, got a reaction from it. So now we'll be looking for a smart money reversal where price does something like this. Boom, take out that low. Boom, take out that high. You know what I'm saying? With some displacement and leave an imbalance around up in here somewhere. Right? On this price leg. Give us some displacement and leave an imbalance on this price leg right there, preferably right there around the breaker. Boom, there's your smart money reversal. So you will start to look for the smart money reversal to play out, coming from the initial consolidation, drop down, smart money reversal to go back up to the minimum, the initial consolidation. That's when you look for it. And once you look for it, remember when I said we're all trading market maker buy and market maker sell models? We are. Let's go look at price and see if that's true. We're all doing it. Let's come over here to the sell side of what we now know this to be a market maker buy model. Let's come to the sell side. We come over here, right there. We come up, we take out this liquidity over here. Boop, hit this buy side liquidity, take them out. Buy side liquidity, take it out. Buy side liquidity, ready, pick it up. Bing. Buy side liquidity, take it out right here. Dilly dally, dilly dally, dilly dally. We get over here 8:15 in the morning, right? Poke above. We got poke above this high one more time. Then what we do right here, drop it like it's hot. What's that right there? Displacement. There's your imbalance right there. We come down here, we start consolidationing, right? We consolidationing right there. We push back up, don't even make it back to this 15-minute imbalance right here. We made it back to whatever we're gonna make it back to. I don't care what it is, right? You got an imbalance right here. You could have got short off of. You got an order block right there. You could have got short off of. Anything that you get short off of, if during this time frame right there, you got to account for the higher time frame. The imbalances above you. You got to account for all of this right here. Is this a safe bet to try to get into around this move right here? It's up to your, you know what I'm saying, trading thing. Because guess what? Right here, boom. Fair value gap trade from 010, get you down to almost a 10-point trade right there. Got a little move there. It's Chop City. Ain't nothing really to write home to mama about, but it's a move inside there. Fair value gap, order block, anything like that right there. This one right here, if you trade, that's lunchtime, so nobody probably ain't trading. But if you trade during the lunch, right, and you getting short off this order block or that fair value gap, you got to account for all of this up here, right? You got to. So if you can take that right there, you still in that move there, right? So that's somebody trading fair value gaps. That's somebody trading order blocks right there. Go down to skinny mini. Go down to skinny mini. Come back to the same area right here. Right? Looking at skinny mini. Looking at skinny mini. That's the 1 minute for those who don't know who skinny mini is. All right, we're looking at skinny mini. So all throughout this right here for skinny mini on the 1 minute, never came back to that imbalance there. Pushed down, fought our way back up. Couldn't quite get up there. This right here is like 8 something in the morning. Chop around. Okay, boom. 9:30 here. 9:30. Break down. Here we go right there. Come back above this little consolidation area right there. Inside this little area there. Displacement, fair value gap, right? Institutional order flow entry drill right there on that fair value gap right there, right? Look like we got maybe a tiny little breaker in there. Yep. High, boom, boom, tiny little breaker in there. Boom, boom, breaker right there, right? So you got a tiny breaker there, you got a breaker there, you got a volume imbalance right there. This is the 1 minute. All these different entries for this drop right here, right? All these different entries right here for this drop right here during the New York session, right? That's the almost 10-point drop right there. So we got a breaker, fair value gap. We got we got like a order block right here, small little breaker inside there too, but I wouldn't count that because we got a real breaker right there. So you got a breaker, order block, a volume imbalance over there, all kind of stuff going on right there. We even got a mitigation block back over here, right there, that we came to, right? That low went up, didn't break nothing, traded down past it, got a mitigation block, something for everybody, right? Something for everybody, just right over here and all of this right here, right? And then we come over here, same thing, some for everybody to buy and sell off of. We get down here at the bottom, right? We get to our level of anticipatory interaction. We got something for the turtle soup traders there, right? When we get down below the lows, we got something for the turtle soup trader. When we get down below the lows, a little turtle soup, something there. When we come back into it again, you got something for the turtle soup guys again. When you get back into it again, right there. We got a mini market maker buy model and a market maker sell model inside of the bigger market maker buy model and market maker sell model. Right. Let us go and highlight this right here. All right. So we're gonna go from here up to here. I want to get up there. There you go. Now let's see if we can find a beginning and an end. Let's go. What's this, like a 1 minute chart? Let's use my tool, 515. Go up to 15 minutes. Oh! Oh! That's a 15-minute low and a 15-minute high. Oh! Was that 2 time frames just now? Oh! That's a 15-minute low and a 15. All I did was highlight the move of the market maker sell model inside the 1 minute, and I went up 2 time frames. I said 5, 15, 2 times. Let's get our chart. Where's our chart? Where's our chart? Where's our chart? La la la. We was on the 1 minute. I went up 2 time frames, 5, 15. And when I got to the 15-minute chart and looked at the area that I had highlighted, and would you know it? Wouldn't you know it? That's a 15-minute low and a 15-minute high. And you say, hey, Tim, what about that one right there? Same thing. I could have highlighted that one there. Let's move it there. I could have highlighted that. Matter of fact, let's go back and highlight that on the 1 minute. For those who say nay. I just went to the parent of the move, right? I went to the parent of the move. That's just a baby of the move right there. That's a subordinate move. That's a subordinate move. I went to the parent move. But if I go right there to the subordinate move and go back to the 15 minute, right? Go back to the 15 minute like that right there. Spread it out. Spread it out. Oh! That's a 15-minute low and a 15-minute high. That 15-minute low came down to a fair value gap, didn't quite get into it inside this humongous order block right there, and then bang, a place of an anticipatory reaction. This 15-minute low came down into an order block, a place of anticipatory reaction, and we got a bang, and inside that price leg right there, what do we have inside that price leg? Down there on the skinny mini. Hey, skinny mini, where are you? There you go. What do we have inside that price leg? Oh, we have a market maker sell model inside that price leg. Right there, we have original consolidation right there. We move up, come down to where the original consolidation. If you use this as the original consolidation, we moved up, and where do we come back down to? The original consolidation. Oh! New sound bite. New sound bite. Hey man, I got about 15 minutes before I got to go get Junior. Do anybody got anything for me? What's up, Mr. Wonderful in the building? That's one of my little brothers from another mother. Mr. Wonderful in the building. What's up, Sanjay? What's going on with you? Do anybody got anything for me before I get out of here? I got like 14 minutes before I got to go leave to get Junior. Did I confuse anybody? Did I help anybody? I talked about the reason why I talked about this today, because I think it was last night or night before that. One night we was talking about market makers sell models and market maker buy models. And I was like, hey, let me talk about this, because we're all trading them. And that gives you a target to shoot for. Remember when, who was it? Was it Stacks? Was it Stacks that talked about where he was looking at the market maker sell model starting? And I was like, I feel it. That's a good place. I was like, but I'm looking at it starting here, because on the higher time frame, this is where the institutional sponsorship started. Not saying this area right here, but he was looking there and I was looking here. And I was basing mine based off of this, where the monthly institutional sponsorship started with the official move. And this was the bottom of the big consolidation. You know what I'm saying? I was just going back to what's the name? Yes. Trader Mo said seems to help with narrative. Yes. Yes. Seeing where the market trying to get to. The market giving you clues of where it's trying to get to. And when you just anticipating it, like where we are now in price, right? When you go to where we are now in price and you anticipating it to happen, right? Let's go up to 1 hour. Right? You're anticipating it to happen because we've come to an area of anticipatory reaction, right? So now we're just looking for a smart money reversal in this area right there, right? Do we get us a attack on sell side once again? You know what I'm saying? And then come up, we go pack out, get a break in market structure right here at a smart money reversal down here. Or do we just ease on down the road and come on down here and finish filling in this hourly busy? Remember we was talking about we got to the 4 hour that we was marked. Remember we said it left a little bit of that 4 hour. I want to see it come back and get it, because when it usually leave that little bit, it usually come get it. And shout out Michelle Tucker. Soon as she got on, she said, Tim, it went and got that little bit. It went and got that little bitty. That Potter, I don't know what you talk about, Potter, but don't nobody say that now, not like you, Potter. They went and got that little bitty. She said, hey, oh, it went and got that little bitty. And we'll talk about that. Let me see. Here goes Sunday, Friday, right there. All right. Price was here. We left that there. And then Monday, we shot way up here. Right. We shot way up here. Then Monday, we closed way up here. Right. We was up here on Monday. We closed way up here on Monday. Right. And then we was like, oh, it left a little bit of this 4 hour. Usually when it do that, it like to go back and get it. And it was looking like it's going to push to this daily. That daily was drawing price to it. Look how the daily drawing price got over here on Tuesday. Got ever so close. Hit that order block right there. And dropped it like it's hard. Came down there and got that little bitty price that it left. Because this the whole, if you don't know what I'm talking about, this is the entire Bissy right there. Right? It went down through that Bissy and left that little bit right down there. A little bit. Now, looking at this right here, We've come to a place of anticipatory reaction. But look what we are in. We have a little area of consolidation right here. This can very well take us to climax right there for a market maker sell model. It can very well do that. And if it was to very well do that, that would be all within this bullish breaking market structure. Before I leave, and while I'm reading this couple dissertations right here, somebody tell me why I'm saying coming down and getting below this original consolidation is well within this 4-hour bullish breaking market structure right there. What part of institutional sponsorship is just glowing in this area right over here? I'm giving you a clue. What about institutional sponsorship is just glowing about right? I'm giving you a clue. A clue. A clue. A clue. I'm giving you a clue. I'm giving you a clue. What about institutional sponsorship? What about institutional sponsorship? I'm giving you a clue. Yes, the order block. And what's the most sensitive area of the order block? From the top of the wick to the opening price. What's the opening price? Once you break that, that's the change in the state of delivery. That was when the market changed its mind from being bearish to bullish. Why is that? Because we came down to an area of anticipatory reaction, got a smart money reversal. We went up, took out the low, right? Came up, boop, breaking market structure. Last down close candle prior to the breaking market structure. That's your bullish order block. That's your bullish order block right there. Right there. So we are coming back down. This will be the first time we came back to it. So we can anticipate price to come all the way down to there before getting a smart money reversal. And keep in mind, we got a lot going on in the world. They may use the higher yields and the situation going over there with the two brothers that's been fighting ever since the biblical days to just melt it down and keep pumping the dollar up. Because remember, we talked about the dollar got some stuff up there it want to get to. So they can use that to push the dollar up and bring this down to deflate some of that overvaluated stuff that's in the market right now. Or they can just take the dollar sideways, or they can take the dollar down and take care of these imbalances down here that it left behind. Let the market tell you what it wants to do. Don't try to jump in front of it. Let it tip its hand. See, peek, take a peek. All right, let me read these dissertations and then go get my son. As usual, this was very insightful. Reversals and rejection blocks are easy for me to see. Thanks, Tim. You are very welcome, Finding Superman. Black Swan, your A's are upside down. I'm glad you found it helpful. Trader Mode, do you have to wait on the 1 hour to make a market maker buy model for the entry, or can you go to the 5 1 minute for entry? That is all up to your entry model. If your entry model says it's not going to make the market maker buy model. The market maker buy model, once it's made, all the trades are done. You're trading on the sell side and the buy side of the market maker buy model, market maker sell model, right? Let's just say this is a market maker sell model that's going to end at terminus, either at this consolidation or that consolidation right there, right? You're buying, getting chopped up and buying and selling, right? And then right here, you're selling, right? And then you sell. So you buy, sell. Right? So the model, you're doing all your buying and selling and creating the model. You're just anticipating the model to play out based off the teachings of this institutional sponsorship, right? Because once they sponsor the move, they're showing you they want to go that way. Then they're going to bring it back for a reason, repricing imbalances, coming back to order blocks and breakers to offset their hedges, right? Offset their hedges and then take the market back the other way, getting net long or net short, depending on which way the model is going, right? But if you got to wait, and now if you talk about a break in market structure, whatever your model says, personally for me, right, I'm looking at 1 hour swing highs and swing lows that line up with sessions and days, right? If it's a 1 hour swing low that line up with a session low or line up with a daily low, once we attack that, right? Once we attack it, boom, we attacked it. I immediately drop down and start watching a 5-minute to see if I start seeing a smart money reversal or a continuation. Right? If I see a smart money reversal, I start trying to trade back into the range. If I see a continuation, I start trying to trade in a continuation of the range. And once I see it playing out on the 5-minute, I drop down to a 1-minute to see if I can get a better entry. And while I'm watching the 1-minute, I'm peeking over at the 30-second to see if I can get an even better entry. So it's up to your entry strategy. Tim, you ever notice how sometimes the prior day midnight open works as an inflection point for reversals? I'll jump on and show you next time it happens. Yes, the open high low close. All of those are very important prices. Open high low close for sessions, open high low close for days, open high low close for candles. All you need to know is to open high low and close. Oh, I got it now. That's the last thing I see. I appreciate y'all for hanging out with me. I got to go get my eldest son from football practice. Hopefully when I get there, he don't make me sit there too long. Coach say practice be over at 6:30. I pull up at 6:45. They still be on the field. They come walking off the field at like 6:55. And then he come out the locker room at like 7:15. Like he was in there getting ready for a hot date. If you don't take them pants off and get in this truck, hey man, hopefully I was able to shed some light on something and share something that was of some kind of benefit for somebody. If I did, I done did my job. But if I didn't, I will try my best the next time I decide to jump on Al Gore's internet. I've been talking a whole lot, so I probably will not do a late night charting session tonight. I probably won't because I've been talking a whole lot. And I'm plumb tuckered. Y'all be safe out here in these trading streets, man. Big Spider gone. Oh, that's what it was. The thing was saying, somebody, Father Legends, he typed out the thing. I don't know if he did it or if he just shared it, but it was somebody put Big Spider in an English to Spanish dictionary. It did it said it in Spanish, and then you know how like when the people on the things and they might hit up against a fence or the dude kicked the shed one time and he was like and the shed had the little eyes in the mouth on it, was like, it hurt, don't it? Woody Fenso from Arkansas State or whatever they be doing. It was something like that, but he didn't say no. He was like yeah. The little spider had a mouth and a what's name. And he was like, yeah, the little spider. Y'all can't see it. What in the world? Get out of there. That ain't what I want. That's what I want right there.
Big Spider.
araña grande. Yeah. Big spider.
I got
Araña
it.
grande. Yeah.
Yeah. The little spider said, yeah. That's what I was trying to show y'all earlier, man. Y'all might not find it funny, but I don't care. Big spider gone. Yeah.